All right, think fast. The world's going electric vehicles, right? What's one car part that's not being disrupted?
That's a good one.
The answer might surprise you. It's LED lamps.
Oh, yeah, makes sense. They got to see where they're going.
Exactly. And today we're taking a deep dive into Fiem Industries.
Okay, Fiem Industries.
They're India's top supplier of LED lamps, to the two-wheeler market, that is.
Two-wheelers. Interesting.
So to guide our deep dive, we've got this awesome report from Value Research Stock Advisor.
I've heard good things about them.
It's dated December 16th, 2024, pretty recent.
Yeah.
Plus, we've got some updated market data as of, get this, January 1st, 2025.
Oh, well, so it's like right up to the minute.
Basically, think of us as your shortcut to understanding Fiem's potential in this whole shifting automotive world. What I found really interesting, and this might surprise you, is that we're not just talking about the EV boom here. Fiem's also riding a wave of recovery in the traditional two-wheeler market in India.
Oh, a recovery. I thought that market was kind of struggling.
Yeah, you're right. It did hit a rough patch. Remember back in fiscal year 2019?
Vaguely.
It was like booming.
Right.
But then, COVID hit, demand weakened, things went downhill.
Yeah, makes sense.
But now projections are showing double-digit growth.
Wow, really?
Yeah, all the way through fiscal year 2027. So Fiem's in the right place at the right time, but the question is, are they just coasting or are they actually outperforming?
Good question.
Because their revenue, get this, has jumped 18% over the past 3 years.
18%. That's pretty good.
Yeah, and the industry average was only around 5% each year.
Okay, so that's a pretty big difference.
Yeah.
Is it all just because more people are buying LEDs?
That's part of it, but the report also says that Fiem actually anticipated the move to LEDs.
Smart.
So they strategically positioned themselves to capitalize on it. They were ahead of the game.
I like it.
And if you look at their recent performance, it shows. In just the first half of fiscal year 2025, their revenue shot up by 20%. And get this, the industry growth was only 16%.
So they're outpacing the industry? That's a good sign.
Exactly. They're not just keeping up, they're pulling ahead. So they're already doing great in the traditional market. But then you add the booming EV market, and it seems like they've got it made.
Yeah, it's a good spot to be in. But how'd they manage to secure that spot in the EV space?
Well, think about it. Electric two-wheelers, they still need lights, right? And Fiem made sure they were the go-to supplier.
Makes sense.
They've got clients like Ola, Aether, TVS, even Hero.
Wow, they're not messing around.
Nope, they're all in. And the EV market, it's not slowing down. Until October 2024, it was growing like crazy, 80% year on year.
80%? That's huge.
Yeah. And now EVs make up 7% of the total two-wheeler market.
7%.
But get this, in the scooter segment, it's 21%.
Okay, now we're talking. So how's all this actually impacting Fiem's bottom line? Is the EV boom translating into real profits for them?
Oh, yeah, absolutely. Back in fiscal year 21, their LED business made up about 40% of their lighting revenue. But now, in fiscal year 24, it's a whopping 52%. And remember, lighting is a huge part of their total revenue, 72% to be exact.
So they're definitely riding that LED wave.
Big time. And that shift to LEDs has also boosted their operating profit margin. It went from 8% to 10.5% in that same time frame.
All thanks to LEDs, huh?
Pretty much, yeah. LEDs just have higher margins, plain and simple. So Fiem's got this incredible momentum. They're at the forefront of the EV boom. What's next? Are they just going to chill and enjoy the ride?
Well, I'd be curious to see what they do next.
Buckle up, because they're actually gearing up for a major expansion.
Oh, interesting. Expansion, you say. Tell me more.
Get ready for this. They're planning a huge investment. We're talking a 2,250 to 300 crore over the current and next financial years.
That's a lot of crores.
It is, and this investment is all about meeting the skyrocketing demand from EVs, but there's a twist. They're also using this to enter the passenger car market.
Whoa, passenger cars. That's a whole different ballgame.
It is. But let's not get ahead of ourselves. First, tell me more about this investment. Where's the money going and how fast?
All right, break it down for me.
They've already invested 70 crore in the first half of fiscal year 25 and plan to put in another 50 crore by the end of the year. The rest will come in the next fiscal year. Now, if we use their management's guidance, which is a fixed asset turnover of 3x, and that's consistent with their past performance, by the way, we can make a conservative estimate.
Okay, I'm not following.
We're looking at a potential revenue of over 200, 600 crore just 3 years from now. That's a 30% jump from fiscal year 24.
Okay, now that's impressive. But before we jump into the passenger car market, how did you guys get to that 200, 600 crore figure? Is there some solid reasoning behind it, or
Oh, it's not just a random number. That sell percent jump is based on their historical fixed asset turnover. And get this estimate is actually pretty conservative.
Really?
It doesn't even include potential revenue from upcoming launches by Hero, one of their big clients.
So there's even more potential upside.
Interesting. Yeah, it's exciting stuff. Okay, you mentioned passenger cars. That's a big leap, right? Going from two-wheelers to cars.
It is. How are they even approaching that?
They're starting small, but strategic. They've already secured projects with Mercedes and Mahindra.
Wait, Mercedes, that seems like a big jump.
It is, but it's not just about immediate profits. They're building a track record, gaining experience, establishing themselves in this new arena. It's like laying the groundwork.
Smart move.
Yeah.
So they're not expecting to, like, take over the car market overnight.
Exactly. Right now, the revenue from this segment is pretty small. It's more about long-term strategy and diversification. You know, something I really noticed while reading this report is Fiem's management style. They're very, how do I put it? They seem down to earth.
Yeah, I know what you mean.
Like they don't make these grand promises they can't keep.
Yeah, that's definitely a plus. Nothing worse than overpromising and underdelivering.
Totally agree. They're known for their conservative approach. And frankly, it's refreshing.
It is, especially these days. So many companies are all hype and big talk.
Yeah, but Fiem actually delivers on their promises.
Can you give me an example? Like, what makes you say that?
Well, for one, they accurately predicted LED's share in their business.
Yeah.
Spot on.
Well, that's good.
And they've consistently hit their revenue and margin guidance from previous calls.
Okay, so they're reliable.
They're also transparent about their challenges, like they were upfront about some headwinds they faced with a client, Gogoro.
Oh, so they're not afraid to acknowledge when things aren't perfect.
Nope. They even took a very measured approach with the Mercedes partnership, emphasizing, technology development and building trust, not just chasing quick profits.
I like that. It's a long-term vision.
Exactly. But let's be realistic. Every investment has risks.
True. That's the nature of the game.
What are some things that could trip Fiem up?
Well, we've already touched on one. The ups and downs of the automotive industry.
Yeah, it's cyclical, right? What happens if demand for two-wheelers, both traditional and electric, suddenly drops?
It's exactly. Fiem's success depends a lot on how well their clients do.
It's a good point. I mean, even with EVs being the future, we can't forget that the two-wheeler industry has had slowdowns before.
Yeah, and it's bound to happen again at some point.
What else? Anything else specific to Fiem we should be aware of?
Well, their revenue is very concentrated.
Oh, right. They rely on a few major clients.
Yeah, like Yamaha, TVS, Suzuki, Honda.
Those are the big ones, right?
Yeah, and those four alone accounted for over 80% of their revenue in FY24.
Whoa, 80%. So if they lose even one of them.
It could be a big hit to their bottom line.
Yeah.
It's like putting all your eggs in one basket.
Yeah, it makes them vulnerable. And then there's a whole passenger car market. That's a big unknown.
Right, it's a whole different beast.
The Indian car market, it's mature, established, tough to break into.
So there's no guarantee that Fiem will succeed there.
What happens if they pour all this money into expansion and it just doesn't work out?
Yeah, that's the risk. They could end up with disappointing returns on that big investment.
Okay, so we've talked about potential rewards, the risks. What about the price tag? Is Fiem a good deal?
Good question. Let's look at the numbers.
Okay, let's get into it.
Their stock's up 52% in the past year. Not bad,
That's pretty impressive.
but it's currently trading at 23 times earnings.
Okay, and how does that compare?
Well, their 5-year median is 18 times, so it's a bit higher than usual.
So not exactly cheap, but they have been growing fast.
True, they have. Their average earnings growth over the past 5 years is over 25% annually. And then there's the whole EV boom on top of that.
Right, that's adding fuel to the fire.
So they're not exactly a steal, but they've got strong fundamentals and a bright future. It's a balancing act, weighing their potential against the risks and the current price.
It sounds like Fiem is a bit of a puzzle. Lots of potential, but also some risks to consider. So who's this stock really for?
That, my friend, is the million-dollar question, and that's exactly what we'll be tackling in the next part of our deep dive.
You won't want to miss it.
Welcome back to our deep dive into Fiem Industries. Before we figure out who this stock is right for, let's see if we can get a better grasp on Fiem's overall financial health. What do you say we take a look at some key financial indicators?
Sounds good to me. Honestly, I always find those a bit intimidating, but I know they're important.
Oh, they are. But they don't have to be scary.
Hopefully not. So where do we even begin? What should we be looking at first?
Well, there's this thing called the Altman Z-score. It's a way to, predict how likely a company is to go bankrupt.
Okay, bankrupt. That doesn't sound good.
No, not at all. But luckily, Fiem actually scores really well on this.
Oh, that's good.
Their Z-score is a whopping 10.74, and anything above 3 is generally considered safe.
So 10.74 means they're in good shape. But what exactly does that score measure? Is it just about how much money they have?
No, it's more than that. It considers things like liquidity, profitability, leverage, all those fun financial terms.
Ah, okay.
Basically, it's looking at a bunch of ratios to get a broader picture of how stable they are financially.
Yeah. Got it. So it's a more holistic view, and Fime's doing great. What else can we analyze?
All right, let's move on to the Piotrowski F score. This one's different from the Z score.
Okay, how so?
Well, instead of the balance sheet, it looks at things like profitability, leverage, operating efficiency, but over the past year. Basically, it tells you how well they're managing their operations and finances.
So how'd Fiem do on this one?
They got a 7 out of 9, which is pretty good.
7, okay, and that's considered.
Above average. Means they're running a pretty tight ship. So far, so good. Right?
Yeah, 2 for 2. Okay, but let's get down to brass tacks. What about their actual profitability? Like, how are they doing at making money?
All right, for that, we look at things like return on equity or ROE.
Return on equity. Okay.
It's the way to measure how much profit a company makes for every dollar of shareholder investment.
So basically, how good are they at turning my money into more money?
You got it. And Fiem's ROE in fiscal year 24 was a pretty impressive 20%.
20%, not bad. Is that good?
Yeah, pretty good. We don't have the industry average to compare, unfortunately. But the report says Fiem's 5-year average ROE is 16%.
Mm-hmm.
So they've actually been doing even better lately.
Okay, so they're doing well and getting better. What other profitability metrics should we be looking at?
Well, there's also return on capital employed, or ROC.
ROC, okay. Another one to remember.
It's similar to ROE, but looks at all the capital a company uses to generate profits, not just shareholder equity.
So it includes debt, too.
Exactly. And Fiem's ROCE is actually even better, 27% in FY24. That means they're making 27 cents of profit for every dollar of capital they use.
27 cents. Okay, that sounds pretty efficient.
It is. Now, speaking of debt...
Uh-oh, this is the scary part, right?
Actually, not for Fiem. Get this. They have 0 debt.
Wait, 0 debt?
Yep, you heard right. No debt whatsoever.
Wow, that's pretty incredible, especially for a manufacturing company. They must be investing a lot.
They are, but they've been incredibly careful with their finances. They generate really strong cash flow from their operations, so they haven't needed to take on debt.
Oh, smart. So they're funding their growth without relying on loans.
Exactly. It's a really good sign for investors. It shows they're disciplined and thinking long-term.
Definitely. No debt means they've got more flexibility and they can handle tough times better. And it means they can reinvest more of their profits back into the business or pay out dividends.
Exactly. It's a big win-win. Okay, so they're profitable, they're efficient, they've got no debt.
Sounds too good to be true. What's the catch?
Well, there's always something, right?
Yeah.
Let's talk about valuation. How does Fiem's price compare to other companies in the market?
Yeah, are they a good deal or are we paying a premium for all this good news?
The report compares Fiem to some of its peers, like Lumax Auto, Vrock Engineering, NDR Auto Components.
Okay, and how do they stack up?
Interestingly, Fiem actually seems pretty attractively priced compared to some of them.
Really? Give me an example.
Well, take Lumax Auto. Their price-to-earnings ratio, or PE ratio, is higher than Fiem's. They're at 28.45, while Fiem is at 21.20.
Okay, PE ratio. Remind me what that is again?
Basically, it tells you how much investors are willing to pay for each dollar of earnings.
Right, right.
And a lower PE ratio can sometimes mean a stock is undervalued.
So even though Fiem's stock has gone up a lot in the past year, they might still be a good deal compared to others.
Potentially, yeah. Now, another interesting comparison is Vrock Engineering. They're a much bigger company than Fiem, but their ROE is actually lower.
Lower ROE. Interesting.
They're at 33.99%, while Fiem is at 42.54%. So Fiem might be smaller, but they're more efficient at using their equity to generate profits.
They're punching above their weight. I like it.
Like,
But valuation's all relative, right?
exactly. Just because they look good compared to some others doesn't mean they're automatically a good buy. We also have to think about their growth potential, those risks we talked about, and what's happening in the overall market.
Right. It's all about context. Speaking of context, I noticed something else in the report. They talk a lot about stakeholders, like taking care of customers, employees, shareholders. Is that just lip service, or is there something more to it?
I think it's worth paying attention to.
Yeah.
More and more investors are looking for companies that care about things like ethics and sustainability.
So Fiem's commitment to stakeholders could make them more attractive to those investors.
Possibly, yeah. It shows they're not just focused on the bottom line.
Makes sense. Okay, let's take a step back for a second. We started by looking at Fiem's financial health, and it looks pretty good. They're profitable, they're efficient, they've got no debt.
And don't forget that impressive cash flow.
Oh yeah, true. And their valuation seems reasonable, especially compared to some of their competitors. Plus, they're at least thinking about sustainability and stakeholders.
You got it.
But remember, this report is from December 2024, and we have that market data update from January 1st, 2025, too.
Oh, right. We should definitely factor that in. What's the latest?
Well, Fiem's stock price has continued to go up.
It has.
Yep. It's now trading at 1,495.90 on the NSE, up almost 1% from the previous day.
So the market seems to be optimistic about Fiem.
Yeah, but we got to be careful, right? Past performance doesn't guarantee future results, especially in a cyclical industry like this.
No, it doesn't. So what's the verdict? What should we make of all this?
Well, Fiem definitely seems like a financially sound company. They're in a good position in a growing market, and their management team seems solid. Plus, they've got that strong cash flow, they pay dividends, and their shareholding pattern suggests long-term commitment.
But there are risks, too, and the stock price isn't cheap.
Exactly. It's complicated. So what else should we know about Fiem Industries? What other insights can you share?
Well, there are a few more things in this report I think you'll find pretty interesting.
Okay, I'm all ears. We're back, ready to wrap up our deep dive into Fiem Industries. We've covered a lot, their financials, their spot in the EV market, even how their management plays it safe. But this value research report, it still has some nuggets I think you'll find useful before making any Fiem decisions.
You know, one thing that really caught my eye was their shareholding pattern.
Oh, shareholding, right.
As of September 2024, the promoters still held a big chunk, 59% of the company.
Okay, so the folks who know the business best, they're still all in.
Yeah, exactly. And that's got to be a good sign, right?
Definitely. But is it just about, like, their confidence, or is there something more to it?
Well, it's a big vote of confidence, that's for sure. Since they believe in the company's future, they're aligned with other shareholders. Think about it. If they were planning to bail, they'd be selling off their shares, right?
Makes sense. They're putting their money where their mouth is. What other clues can we find in the financials?
Let's talk cash flow. The report highlights how strong their cash flow from operations is.
Oh, cash flow, right. I've heard that cash is king.
It is. You can have profits on paper, but if you're not generating cash, you're in trouble.
Okay, so how's Fiem's cash flow?
Rock solid. They've had positive cash flow from operations for the past 5 years. Every single one.
So they're not just profitable, they're actually collecting the money.
Yep, they're converting those profits into actual cash. And speaking of sharing the wealth, what about dividends?
Dividends, always a good topic. Are they paying them out?
They are. Consistently, too. And as of January 1st, 2025, their dividend yield was 1.34%.
Not bad at all. Okay, let's sum it up. Fiem Industries, they're financially sound, they're in a growing market, their management team seems to know what they're doing, they've got great cash flow, they pay dividends, and even their shareholding pattern points to a bright future.
You got it.
But we also talked about some risks they're facing, and their stock price, well, it's not exactly a steal right now.
True, it's all a balancing act.
It is. So what's the bottom line for our listeners? What should they take away from all this?
There's no easy answer. It depends on your own investment goals, how much risk you're comfortable with.
Right. What might be a perfect opportunity for one person could be completely wrong for someone else. We've given you the info, the insights, the analysis. We looked at Fiem's good and bad points, the chances they have, the threats they face. We dug into their financials, where they stand in the market, how their management operates, even their commitment to stakeholders.
It's all out there.
Now it's up to you to use this information and make your own decision, a decision that fits your own situation.
Absolutely.
Remember, the investment world is full of possibilities. And if Fiem Industries doesn't feel right for you, that's okay. There are plenty of other opportunities out there just waiting to be discovered.
Keep exploring.
The important thing is to keep learning, asking questions, and working towards those financial goals you have. Who knows? Maybe our next deep dive will uncover your next big investment.
It's out there.
Thanks for joining us on this deep dive into Fiem Industries.
Until next time.